Hello, and welcome to this session on the basics of banking and budgeting. My name is Veera Desale, and I'll be your guide to explore how banks work, why budgeting is important, and how you can take control of your financial future. Whether you're just starting to manage your money or looking to build better habits, this session will give you the essential tools to make smart financial decisions. We'll walk through why banking matters, the types of banks and bank accounts, the services banks offer, how to build a budget, and practical tips for saving money. Let's get started. Before we dive in, here's a quick overview of what we'll cover in this session. First, we'll talk about why banking matters and how it keeps your money safe while opening doors to future opportunities. Next, we'll explore the different types of banks and break down key banking services and account types you'll likely use. After that, we'll move into budgeting, what it is, why it's important, and how to build your own budget using simple strategies. We'll also go over practical money management tips to help you save more and spend smarter. Finally, we'll wrap up with some key takeaways to help you feel confident about managing your finances going forward. Let's begin by asking, why does banking matter? Well, imagine carrying all your savings as cash. It's risky and not very practical. Having a bank account keeps your money safe and accessible. In the US, most bank accounts are insured by the FDIC, which means your money is protected up to $250,000 per depositor, even if the bank fails. That's a level of security you don't just get with cash. But beyond safety, having a bank account opens doors. You need one to get your paycheck directly deposited, to use payment apps like Venmo or PayPal, to pay bills online, and even to qualify for loans. Banking also helps you build credit. Having good credit can help you rent an apartment, buy a car, or secure a mortgage. There are two main types of banks you'll likely use. The first is a retail bank. These are for profit businesses like Wells Fargo, Chase, or Bank of America. They offer checking accounts, saving accounts, credit cards, loans, and more. The second is a credit union. Credit unions offer the same services as retail banks, but they're not for profit. They often have lower fees and better interest rates, but sometimes you'll need to meet specific membership requirements, like being part of a school, company, or local community. You may also hear about online banks, which don't have physical locations but often offer higher interest rates on saving accounts because they have lower operating costs. So, what exactly do banks do? Banks offer deposit services, lending services, and financial advising. When you put money into your account, the bank holds it safely and may even pay you a small amount of interest on your savings. Banks also offer loans on big life purchases like cars, houses, or college tuition. Plus, many banks have advisors who can help you plan for big life goals like saving for college or retirement. Think about it. When you swipe your debit card, deposit your paycheck, or send money on Cash App, a bank is working behind the scenes to make that transaction possible. So, why is having a bank account so essential? First of all, it's safer than carrying cash, as assets in a bank are generally insured by the FDIC. Also, without one, you can't get direct deposit from your employer. You can't easily pay bills, or you can't use modern payment apps, and you miss out on growing your money through interest. Most people today need a bank account just to keep up with basic financial life. Have you ever used a debit card, a payment app like Venmo, or an ATM? All these require having a bank account. It's the foundation for managing your money. Let's now talk about the types of bank accounts. There are three main kinds you should know. First, there's a checking account. This is your day to day money. You use it for spending, whether that's using your debit card, paying bills, or taking out cash. It's easy to access, but it typically doesn't earn much interest. Next, there's a savings account. This is where you store money for future goals. Savings accounts typically earn some interest, meaning that your money can slowly grow over time. Finally, there's a high yield savings account. These pay much higher interest rates but may require larger minimum balances or come with more rules. Now, let's dive into budgeting and take a moment to really understand why budgeting is so essential. Budgeting helps you manage your spending, track where your money is going, and most importantly, gives you control. When you have a budget, you can see exactly how much you're earning, where you're spending, which helps you avoid those moments where you wonder, where did all my money go? By creating a budget, you can prioritize what's most important and work to your financial goals, whether it's saving for a new phone, a trip, or having a little extra at the end of each month. Without a budget, it's easy to spend on things you don't really need and lose sight of your bigger financial picture. Budgeting isn't about restricting yourself, it's about being intentional. It helps you make smart choices with your money instead of spending impulsively. When you know what you can spend, you're less likely to fall into debt or feel stressed about your finances. In this session, we'll explore some practical budgeting techniques to help you get started, including simple strategies that make managing your money feel less overwhelming. Budgeting is one of the best steps you can take to build financial confidence and prepare for the future. Budgeting is simply creating a plan for how you'll spend your money and save your money. It's about making sure you know how much money's coming in, like your paycheck or allowance, and where it's going out, like food, transportation, or shopping. Without a budget, it's easy to overspend and realize too late that you don't have enough to cover your needs. Think of a budget as a map. It shows you where your money is going and helps you avoid getting lost financially. Have you ever reached the end of a month and wondered, where did all my money go? Budgeting helps answer that. So, why is having a budget really important? The simple answer is that money is limited. Most of us don't have enough money to buy everything we want or need at the same time. Whether you're saving up for something big, trying to cover your monthly expenses, or just figuring out how much you can spend on fun, a budget helps you make those choices. When you don't have a budget, it's easy to spend too much on things that aren't really priorities, and then you realize you don't have enough left for the things that really matter. A budget helps you prioritize. It helps you see clearly what's most important for you. To make a budget, you compare your income against your spending. One simple budgeting strategy is the 50-30-20 rule. Let's break that down. 50% of your income goes to needs, things like rent, groceries, transportation, and bills. 30% goes to wants, like shopping, streaming services, or eating out. 20% goes to savings or debt payments. This structure helps you balance your financial life and make sure that you're setting aside enough for your future. It's flexible too. You can adjust these percentages based on your situation. Let's go over some practical money management tips. First, cut unnecessary expenses. Maybe you're paying for subscriptions you don't use, or you could eat out less often. Little changes can add up. Second, spend wisely and save. You can set up automatic transfers to your savings account. This way, saving becomes effortless. Even saving just $10 to $20 a week makes a difference over time. It's also important not to impulse buy. Always comparison shopping is another good habit. Whether you're buying groceries, clothes, or electronics, checking prices from different stores and websites can save you a lot in the long run. Finally, set clear, specific financial goals. Maybe you're saving for a laptop, a trip, or just building an emergency fund. When you have a goal, it's easier to stay motivated and resist impulse spending. Let's quickly review what we've covered. Banking is essential for safely managing your money, making payments, and building your credit. There are different types of banks and accounts: retail banks, credit unions, checking accounts, and savings accounts, each with their own purpose. Budgeting helps you control your spending, save for the future, and avoid financial stress. The 50-30-20 rule is a simple and effective way to manage your money. Small steps like cutting expenses, saving automatically, and setting goals can make a big impact. Remember, learning about banking and budgeting is one of the best things you can do for your financial future. The sooner you start building good money habits, the more freedom and flexibility you'll have later on. It's never too early to start taking charge of your finances. Thank you for watching this session on banking and budgeting. In conclusion, understanding banking basics and budgeting is vital for financial success. I hope you now feel more confident about managing your money, understanding your bank accounts, and building a budget that works for you. Stay curious and continue to educate yourself on personal finance.